All right, the bitch is rolling. All right. So, if you watched the first video, this is the second video that I was talking about. Um, in this video, we're gonna really learn about market structure, but can't learn market structure without learning trends and all that other bullshit. So, without further ado, instead of this video being short, it has to be medium. So, shameless plugs out the way. Let's get them shits done. If you're new to the channel, like, share, subscribe. If you're old to the channel, all my videos are gone. I think I have to keep saying that for the next 5 to 10 videos until you guys understand that them bitches is gone. They is gone because I just ain't want them there. I was getting some views on them, but I really ain't want it there. Wanted to turn a whole new leaf. I wanted to, when you look at this channel, you're gonna see the whole come up. Simple as that. I compiled a bunch of little um what do you call it? Bunch of forex pages. So we're gonna break down all the little quick stuff. Can't learn market structure without learning all of these. So, with that being said, first of all, let's figure out market structure. Market structure is the behavior, condition, and current flow of the market. It highlights support and resistance levels, swing highs, and swing lows. A trend is a simply a trend is simply a consistent direction of price movement over time. Market structure can tell you if the market is trending or not. So they basically saying market structure is a whole ass circle of all these shits. So in order for you to find market structure, you got to know support resistance levels, swing highs, swing lows, and the direction of price, which is the trends. Hence the reason why I was like, God damn it, I gotta teach y'all motherfuckers this shit. Sorry. If y'all ain't here from the last video, Paulin is whooping my ass. So that be without further ado, we touched on support and resistance on the last one. Couldn't find another, you know, place to find a better support and resistance at. So we're gonna do it from baby pips. What support and resistance? Support and resistance is one of the most widely used concepts in trading. Strangely enough, everyone seems to have their own idea of how you should measure and trade support and resistance. Let's take a look at the basics first. Look at the diagram, you see a zigzag pattern, all that other bullshit. When price moves up, then pulls back, the highest points reached before it pulled back is now resistance. So basically what they're saying is price push up, this peak right here is the resistance. How you see that on real life charts, because they don't tell you. When price push up, this peak right here is resistance. This peak right here, or you could do this one right here, is resistance. This peak right here is resistance. These peaks right here is resistance. You could do these resistance. Feel me? That's basically what they telling you. All of this shit is resistance. If you was to come any peak, this is why I like RENKOS, by the way. I'm gonna keep reiterating that. Look at that. Resistance. Resistance. That's a small one. That's just one though. Resistance. So now that y'all know, y'all just gonna go back because I'm not gonna redraw them hoes up again. But yes, all the peaks is resistance. Resistance level indicates where there will be a surplus of sellers. Basically saying, normally at these peaks, hold on, there you go. Normally at these peaks, you get to see a lot of selling, i.e., drop, drop, drop. You feel me? Drop. When price continues up again, the lowest point reached before it started back is now support. Get these bullshits off my screen. Alright. It's going to be confusing because this is a bunch of jumble up, but follow my lead. Push up, come down. The lowest point, support. Feel me? That's what it said. When price continues up again, the lowest point reached before it started back is now support. So if we follow that shit on the RENKOS, support, push up, lowest point reach, support, push up, lowest point reach, support, push up, lowest point reach, support, push up, lowest point reached, support. Nigga, that's what it fucking say. Push up, lowest point reach, support. Push up, lowest point reached, support. You can't get no, you feel me? Push up, lowest point reach, support. Same thing for this bitch. Push up, lowest point reach, support. So, you see it works. These right here are more bad examples because the market is kind of ranging right here. But this is more trending. Look, break, retail, break, we didn't get there yet. Support levels indicate where there will be a surplus of buyers. So every support, you should see buyers. Boom, shoot up. Boom, shoot up. Boom, shoot up. Boom, shoot up. Boom, shoot. Alright, so now, in this way, resistance and support are continually formed as the price moves up and down over time. The reverse is true during a downtrend. So basically, what they basically saying, this is an uptrend, and if you come here, so we're gonna find support and resistance. Support on a downtrend, you know, every time it comes down, the lowest point is support. When it shoots up, highest point is resistance. Let me see if they're gonna tell you that. So it's basically the reverse of all of this. So what they saying is resistance level indicate when price moves up and then pulls back, the highest point reach is not resistance. So the lowest point reach would then be resistance on a downtrend. So if you come in here, shoot down, shoot down, shoot down, lowest point reach, resistance. Shoot down, shoot down, shoot down, shoot down. Am I saying that right? Because this would be support. Okay, I'm capped. The lowest point reach would be support. And the highest point reached during the downtrend would be resistance. So when price moves down and then pulls back, the highest point reached before it pulled back is now resistance, or the lowest point reached before it pulled back is now No, the highest point reached before it pulls back is not resistance. Yeah, I was saying that right. My bad. So when it shoots down, the highest point it got will be resistance, which is this. The lowest point it got will be support. See, I'm saying that right now. I'm not gonna edit that, so y'all gonna hear me fuck up. So if we come in here in this shoot down, the lowest point here is here. And then on the shoot up, the highest point is here. So that will be your support and resistance. Shoot down, boom, support. Come back up, resistance. Boom, shoot down, supposed to come back up, never did. Made this, lowest point reach. Boom, shoot down again, another lowest point. That's now your support. Comes back up, retests this previous lowest point. So it went from being support, now turned resistance. And now look, retest resistance, shoot back down to support, come back. Since this is the highest point reached now, put that there, boom. Come down to support, test resistance. Since price is right here, if we're looking at it, this is the highest point reached. Bang. Come back down, touch support, shoot back up to resistance. This is the highest point reached now. Bang. Come back down, test support, shoot back up. This is resistance, shoot back down. You feel me? So it's basically showing you. So that's how you find support and resistance in an uptrend. That's how you find it in a downtrend. I hope that was pretty explanatory for you guys. I'm gonna leave everything in there, all my jumble ups, all that other good stuff, so you guys can know that I'm not perfect and I wasn't planning on teaching this. It was a spur of the moment. But now that you understand support and resistance, let's move on. What else they say? Support, resistance levels, swing highs, swing lows. So we about to figure out how to identify swing lows. It does say before we get into identifying swing highs and swing lows, let's define them quickly. Most people will probably imagine a high or a low price that stands out from the prices surrounding it. That definition is actually quite good. The swing high and swing lows are the high and low points of a move that spans multiple candles. Let's go ahead and get all this bullshit off my screen. So, they said, let's see what they said. Let's see what they said. Let's go back. Let's go back. The swing highs, the swing highs and swing lows are the high and low points of a move that span multiple candles. So let's say this. We're on a downtrend. Open. That's your swing low. That's your swing high. That's your swing low. Basically, swing low, swing low, swing high. Swing low. Swing low. Swing high. So, let's see. In a downtrend, can I change the colors? Let's go swing low, red. Let's go swing highs, green. So, on a downtrend, all of your lowest points are your swing lows, and all of your higher lower points are your swing high. Meaning, this is your previous swing low. So, if nothing goes above this but stays below it, anything close to this is a swing high on a downtrend, i.e. this. See the arrows work. I.e. this. This would be your swing high point because it is lower than this. I mean, yeah, it is lower than this, but higher than your swing low. This is your swing low because it is lower than your previous swing low and lower than your swing high. This became a new swing low because it was lower than your previous swing low. And that is how you find your market trend. Feel me? You find your swing lows, your swing highs on a downtrend. When you come to your uptrend, swing highs. Swing highs. Anything higher than your previous swing high. So that's your swing highs there. 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 Feel me? Anything higher than your previous highs are your swing highs. Those being said, you now know what swing highs and swing lows are. Get all these bullshits off because I hate seeing hella stuff. That's how it looks on the on the regular candlesticks. Swing highs, swing lows. Also, got to figure out what is a trend. Trend is a tendency for price to move in a particular direction over a period. Trends can be long-term, short-term. Trends can be long-term, short-term, upward, downward, or even sideways. Success with Forex market investments is tied to the investor's ability to identify trends and position themselves for profitable entry and exit points. So, how do we identify trends? For me, looking this right here, a little short-term trend. Let's go ahead and make that bitch bulky. Make it yellow. So this right here, little short-term trend. It's an uptrend. Why is it an uptrend? Like I said, trend is price moving in a particular direction over a period. So for a short time, price was moving up. To define a trend or to find a trend in Forex, you have to find price bouncing off of, you have to find price making swing highs or swing lows in your direction. So if it's going up, it has to continuously making swing highs, basically giving you that stairs motion. I like to use rectangles. So swing highs, swing highs. Which one? These ones? Swing highs, swing highs. Do you guys see the stairs formation? Bow, 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 bow. So, that being said, you find your trend. Trend consists of support, resistance. Well, yeah, support, resistance, swing highs, and swing lows. You want to find stuff like that that's being respected. So, like I said, this was a trend up. So, if you were to trade this just based on what you see, you would have gotten to a trade here. I should ask. You would have gotten into a trade here. Bang, shoot up. You would have gotten into a trade here. You would have gotten into a trade here and possibly here. And then you would have gotten into a trade here. Whew. That's how you would trade the trend. Let's draw the whole thing up. Stop being lazy. That is how you would trade the current uptrend. So it looks like stairs, and every point of contact on the stairs before you make an ascent would be probable spots to trade. This market structure is telling me that we want to go up. In order for us to go down, what has to happen? The stairs would have to start forming downward. So right now, this is the floor. So if we wanted to go down, currently, this right here, maybe this right here, but we have to break below this because market structure is still in the up. So in order for it to stay in the up, if we come here and bounce up, we're still going up. If we come below here, and we bounce and we come back here, then it's now starting to make a downtrend. It has broken its current market structure and is now producing sells. Cool. So with that being said, we now probably understand support, resistance, how to identify swing highs, swing lows, ultimately leading you to understanding market structure. Hey, if I had a clap button, I would have boop. It would have been like So let's see. If we come to AU, right? Let's come to our objects list and delete everything. So we wanted to go off market structure from previous. Sell, lowest point, swing low. Okay. Buy, This was a sell point. Never came back to here. Cool. So, swing low, swing low. Cool. But now look, it never came back to here, nor never came back to here. So now, swing high. So now look, we got to swing low, we got to swing high. Lowest point is actually right here. So now we have two lowest points. We have this one, we have this one. So the market can come back here, or it can stay right here. Keep in mind, we have these swing highs. So market comes, stays within these, shoots, we respect this, comes down. Now I would be entering my trade right here. You guys don't know the strategy yet. Stop loss underneath here. People who trade Renkos will understand why. But for the time being, we not there yet. Now, if you want this to go up or down, if you want it to go up, it has to continue the stairs motion. So we have swing high, we have a swing low. So we come here, swing highs again. You can delete this if you want to. So you have these swing highs right here. If you watch current price and do everything, if you're scalping based, this is what you would do. You watch, you see these swing highs form, price pushes past the swing highs, starts to form our stairs. Boom, your swing low right here. This is where you would be entering your trade because now look, swing highs are being respected, swing lows are being respected. Price isn't breaking below these, and prices have just pushed past these swing highs. So then you get into your trade right here. And you take it up. And you can get into your trade again right here and take it up. So now you come swing high. Price never came back to your swing high. Do you take the trade? No, because it's not doing what you wanted to do. Push up, another swing high. Price came close. Did it touch? No. Come here, another swing high. This time you got another good entry. Goodbye. Right here. Hit, bought up. Another swing high right here. Another swing high right here. Swing high, swing highs. Feel me? And that's just AU. And that's all on the uptrend. Feel me? You was to come over here. Let's find support resistance. Support, you find a lot of swing highs there. I mean resistance, you find a lot of swing highs there. Support. Let's find our resistance. Swing low. That could be a resistance if you're trading this. Boom. Okay. Come up to the swing highs. Nothing. Drop. I would have been taking the trade right here. But that's another chat for another day. Push down. Push up. This is still your lowest point, actually. So you leave that there. Off your lowest point, pushes up. Comes to this. Comes up here. perfect sell entry right here. Sell, come down, push up, sell. This is now your lowest point. Swing low, comes down to your swing low, pushes up to your previous swing low, creates a swing high, pushes down to your now swing low, goes a little bit lower, now it becomes your newest swing low because it went a little bit lower, comes back up, can't break past swing high. Feel me? Shoots down, pushes up, goes a little bit past your swing highs. These are now your new swing highs. Come down, pushes past these swing lows. Feel me? Comes and retests it. Gives you the stairs motion. Feel me? Boom. Shoot down. New swing low. Your trade is right here. Need you guys to understand that. Market structure is everything. When you understand market structure, it's easier to trade. All market structure is support and resistance, finding swing highs and swing lows, understanding the trend. That's all it is. Once you know them three things, you can successfully take a trade. Emotions play a factor, but for right now, if you're just doing shit robotic, you would legitly win your trades just doing that. See this shit off the screen. So, right now, we were looking at current price and we were to trade AU as it currently stands. Swing low. Swing low. Your trade, as you took AU, would have been right here. Now, swing low. Your trade, if you're gonna take AU, would be right here once you get whatever you need. You understand? Simple. And that's just the basics. When you get into strategies and everything else, then there's different stuff that you look for. But this is the basics of all strategies. Feel me? We are going on 33 minutes. I don't want to really hold y'all up for watching. This has been your boy Slime. Listen, y'all tap in for real, your boy. Tap in for real. I'm gonna be trying to do like one or two of these a day, maybe even three, because I feel like the homies need it. My roommate already talking about, bro, tap in, put the videos on YouTube, all this other good stuff. He's like, I be seeing you making your bread, yada 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 yada. And I'm like, all right, bet. With that being said, I bid y'all adieu. This has been your boy Slime. If you're new to the channel, make sure you like, share, subscribe. If you're old to the channel, like, share, and comment. If you made it to the end of the video, go in the comments and spam yeah to know that y'all made it to the end of the video, and I'll actually be happy if I see that. At least one person though. If I see one person do that, I'll be lit. I know that y'all actually watching this shit. My time ain't going to waste. With that being said, I bid y'all adieu. Peace.